The cryptocurrency circle has been making a lot of commotion recently. As more people become curious about crypto, experienced traders often provide newbies one piece of advice to purchase the dip. What exactly does this mean, and how do you do it? Let's discuss this today. So welcome to the Crypto Millennial. If you want to build a lot of money, then this channel is for you. Before we continue, please take a moment, go down and smash the like button and subscribe to connect with us. Traders use some technical analysis tools to determine emerging patterns and successfully trade. One of the most popular trend-defining patterns that traders typically count on is called the price channel. A simple channel may refer to a distribution system for businesses or a trading range between support and resistance on a price chart. An ascending channel happens when visually analyzing an overall uptrend within the asset cost of a stock, bond, or other such investment. It is a technical analysis strategy where the bottom line is depicted as the trend line, support, and the top line is called the resistance. An ascending or bullish price channel is shaped by drawing parallel lines between the resistance and viewed assistance levels that an ownership exchanges in between on candlestick charts. Now let's discuss the ascending channel essentials in detail. A rising channel is formed when the cost action can be included within two upward sloping parallel lines. Firstly, the primary trend line is drawn by signing up with the two response lows. Then a parallel line is drawn by linking two response highs. This line is called the channel line. The primary trend line is the assistance area from where the cost bounces back, and the channel line functions as the resistance from where the cost rejects. Generally, the cost stays between these two lines. As the cost continues to rally inside the channel, the rising channel is considered bullish. In the chart, the two response lows are significant, as ellipses can be signed up with the primary trend line. Ideally, for channel line, 2 points are required. However, for early recognition of a channel, a parallel line with a simply one response high can likewise be drawn. As you can see, the cost rebounds off the primary trend line and rejects from the channel line, which indicates that traders purchase near the primary trend line and sell when the cost reaches the channel line. The cost action inside the channel may be arbitrary, and it does not follow any set pattern. As the cost proceeds to extend inside the channel, it uncovers that the pattern is bullish. As a result, traders use adjustments to the primary trend line to buy, giving a low-risk entry chance. A breakout of the channel demonstrates a pickup in bullish momentum, while a break recorded below the channel proposes a conceivable adjustment in the pattern. A break recorded below the channel does not continually lead to sag, since in some cases the cost remains range-bound for a few days, and after that resumes the uptrend. But what are ascending channel breakouts? The chart of FTX token reveals a rising channel where the primary trend line was drawn by signing up with the two response lows. A parallel line from the response highs was used to draw the channel line. In the chart, the cost mainly stayed within the channel from December 2019 to mid-December 2020. Therefore, corrections near or to the primary trend line might have been used as a low-risk purchasing chance by keeping a close stop-loss. Generally, a breakout of the channel suggests that the bullish momentum has actually happened. However, in this case, the breakouts ended up being bull traps on two occasions. First, the initially close above the channel line on August 30, 2020, returned within the channel on September 3, 2020. Another close over the channel on November 30, 2020, ceased working to draw in buyers at greater levels, and the cost returned to the channel on December 1, 2020. It reveals that there's no certainty in exchanging, hence traders must always use a stop-loss to secure their positions. Hold on, friends. I hope you are enjoying the video. Don't forget to subscribe to Crypto Millennial to stay in the loop with our unique videos. And if we missed something important so far, comment us below. Keep watching. Finally, on the third effort, the cost broke out of the channel on December 16, 2020, and the bulls safeguarded the retest of the breakout level between December 20th to December 24th. This implied that the previous resistance had actually turned to assistance and the bullish momentum had to do with to get. A breakout from a rising channel, if supported, programs the pickup in momentum. That, as a rule, leads to a more powerful rally. The target objective can be decided by including the height of the channel to the breakout level. In the previous case, the height of the channel is $1.15. Adding that to the breakout level of $4.7 offers a target goal of $5.85. However, the rally turned vertical and rapidly reached $10.10 on January 7, 2021. Thus, it reveals that the target goal must be utilized as a guide and consider other supporting signs before closing the position. Let's move towards the ascending channel breakdowns. The failure to thrive, the FFT, once again formed a rising channel. The cost increased from about $20 to $63 inside the channel. After the sharp rally, the cost broke the channel on May 17th. The bulls endeavored to push the cost back into the channel on May 18th. Be that as it may, stop working. This drew in powerful selling, and the set started to sag. The depth of the channel is $14.90, and the breakdown took place at $50.56. Subtracting the depth of the channel from the breakdown level presented a target goal of $35.66. However, the drop proceeded and the set struck $21.89 on June 26th. It reveals that traders must turn cautious when the price breaks down from the channel. Remember, not all breakdowns lead to an extended drop. Bitcoin traded inside a rising channel from April 2020 to early June 2020. The cost broke the primary trend line of the channel on June 11, 2020. However, the BTC set did not begin a sag. Rather than, the cost traded inside a variety for a couple of days, and after that, resumed its uptrend. That demonstrates how a break in the channel does not constantly lead to sag. Instead, traders must enjoy other supporting signs and the cost action before turning bullish. A rising channel means the early phases of a more powerful uptrend, and it gives a chance for traders to buy on dips to the primary trend line. A breakout of the channel typically suggests a pickup in momentum, leading to a sharp rally. However, it usually is much better to wait on an effective retest of the breakout level to develop new positions, since, in some cases, a breakout ends up being a bull trap. When the cost breaks recorded below the channel, it is a sign that the uptrend has actually ended. However, that doesn't constantly lead to sag. Sometimes the cost sells a variety after breaking listed below the channel, and after that, as the volume gets, the property starts a brand new up move. Traders must utilize the rising channel in combination with other technical tools to include additional insight into their buy and offer choices. So guys, I hope you liked this video and found it very helpful. Please smash the like button and hit the subscribe button to become a Crypto Millennial Squad member. Remember, every financial trading and investment relocation includes danger. You must perform your own research study when deciding. Thank you so much for watching. Have a blessed day.